So, in the world of fintech, how you lend money has gotten incredibly specialized, right? But what about how you get that money back? Well, for a lot of folks, it's still stuck in this one-size-fits-all approach. Today, we're going to dig into a much smarter way: vertical collections.
And this question right here, this is the core tension that's driving a massive shift in the industry. Think about it. Lending got smart. It went vertical, tailored to specific needs. But collections, it kind of got left behind, staying horizontal and, well, generic. This mismatch, it isn't just inefficient. No, it's actively costing companies money. And just as bad, it's damaging customer relationships that were so hard to build in the first place. So let's break down why this is happening.
All right, first up, let's talk about lending's big mismatch. This is really where the whole problem starts.
You see, the smartest lending products out there today are anything but generic. They're built for specific verticals, like manufacturing, logistics, or retail. And why? Well, because each of these industries just operates on its own unique financial rhythm, its own cash flow cycle.
Just think about it for a second. The kind of financing an e-commerce seller needs while they're waiting for a platform payout is completely different from the working capital a logistics company needs when they only get paid after a shipment is delivered. I mean, each of these businesses has a totally different financial heartbeat.
But here's where everything just hits a brick wall. All of that brilliant, sophisticated innovation on the lending side, it just vanishes the second a payment is missed. All that context, all that nuance, it's just forgotten, and everyone falls back on an old, broken system.
And that leads us right into what we call the horizontal trap, this outdated, generic model that's really holding the entire industry back. Yeah, this probably looks super familiar, right? Doesn't matter if you're that big logistics company, an online seller, or even a farmer. The default response is always the same: this rigid, escalating series of automated texts, robocalls, and then finally, a human gets involved. It treats every single borrower exactly the same. And the real problem with that old playbook? It's pretty simple, actually. Repayment behavior is almost never generic. It's always contextual. A missed payment isn't just a number on a spreadsheet. There's a story behind it. The why is everything. But that horizontal model, it has no way of even hearing that story.
So, if that's the problem, what on earth is the solution? Well, it's a complete shift in philosophy. It's the vertical solution.
And here it is. This is the crucial point. It's about totally flipping your mindset. Vertical collections means you stop asking, how do we chase this debt? And you start asking, how do we design a recovery process that fits perfectly, seamlessly into this borrower's world? It's about building a product, not just running a tired old process.
So, how does this actually work in the real world? It's simple. Context is everything.
Okay, let's make this really concrete. For a Kirana owner, that's one of those small, local neighborhood shops you see all over South Asia. A simple WhatsApp message from a trusted local partner is what works. For a big logistics firm, though, it makes zero sense to chase them a week before a massive freight settlement is due. You time the collection to match their cash flow. And for a gig worker, small, automatic micro-deductions from their next payout, that feels manageable, not like a punishment.
Now, this doesn't mean you have to create a million different plans. Not at all. It's about applying a few core principles. You just have to ask, is your timing synced up with their industry's payment events? Is your process actually integrated into their daily workflow? Does the tone you're using feel right for them? And in really sensitive areas like healthcare, are you leading with empathy?
Okay, so let's pull back for a second and look at the big picture here. This isn't just some new tactic. It's a huge paradigm shift. The future is all about being embedded. This slide really lays it all out, doesn't it? We're moving away from that old, rigid, process-driven model that's obsessed with one thing: cost. And we're moving towards a smarter, context-driven model that actually protects your revenue and the customer relationship by leading with a better, more thoughtful experience. So, if you take one thing away from this explainer, please let it be this: the game is no longer about who can make the most calls or send the most annoying reminders. That's old news. The real innovation, the real game changer, is making the recovery process so smart, so integrated, that it feels like a natural part of the borrower's world, not some aggressive, stressful intrusion. It's about being proactive, not reactive. And that brings us to our final thought. This shift isn't just a theory. It's already happening in little pockets all across the industry. So the real question for you is, where are you seeing the early signs of this in your own ecosystem? And maybe more importantly,
Are you ready to lead the change? Thanks for digging into this with us.